Good afternoon, good morning, good evening, wherever you are in the world, to our proptrade.com, theproptrade.com's latest webinar, seminar, call it what you will. It's an analysis of the live situation here on Friday, the 22nd of November. We're rapidly, obviously, approaching year end. We're approaching the end of the month next week. Sorry, next week, I should say. Next week is obviously Thanksgiving on Thursday. US markets closed. Obviously, lots of volatility potentially before then, but lots of volume taken out of the market as well over the next sort of few weeks as we go into December as well. But more on that as we roll towards the end of the year. December is a really, really good trading month. Too many traders I know sort of shut up shop in December. Some of the best trading opportunities of the entire year actually take place in December. So it's typically a strong month for stocks, November, December, possibly running January as well sometimes as well. But obviously with the Trump re-election, lots of things have already moved, as we've already seen this week. So I hope you're all well. Any questions, queries, comments, please stick it in the chat box. Anything you want to see that I don't talk about, please let me know. Anything we need to improve, again, please let me know. If you don't like my glasses, you don't like my shirts, please let me know. You know, we're here to help, guys. If it improves your trading, I'll wear a different shirt. Okay, today's been a very significant day as far as data already, and we've had some significant moves. The euro and the sterling are very much under pressure at the moment. We've got some big news out in about 10 minutes. The just come down here. That's what we're waiting for. The PMIs. Remember, they're forward-looking data. PMIs. The Project Managers Institute. So it's the guys that actually place the orders for kit and equipment, both for manufacturing and services companies. Anything above 50 is an expansion of that sector. Anything below 50 is a contraction, as you can see here. US contraction according to the S&P Global PMI Institute is still in contraction, just like many other developing countries, most notably Germany, unfortunately. But anyway, see what that data looks like in 10 minutes time. We also got later on the University of Michigan, the UoM, their consumer expectations, consumer sentiment expectations. Consumers been remarkably strong in the United States. It's people, even though people are feeling the pinch because of inflation, that's what lots of people are saying why they ended up voting for not for Biden or not for Kamala Harris and indeed trumping for Trump on how they felt the money in their pocket, the inflation, how the US was feeling over the last 4 years. Even though stock markets are at record highs and inflation has come down very significantly, people didn't give the Democrats the benefit of that, and so Trump will take over the White House again at the end of January. So lots gone on today already, as I say. Bearish weak data from the UK with retail sales, and also their PMIs were also a wee bit weaker this morning here, back into contraction. The struggling manufacturing sector, Eurozone area, also under pressure today. German, you can see here, German manufacturing PMIs 43.2, although marginally better than expectations, and 0.2 ticks up from last time. Very weak at 43.2. As you can see, the French no better. They're slipped backwards as well. So the pressure on Lagarde and gang to cut interest rates continues, which is why we've seen euro back at 105 this morning today. So dollars very much on the front foot. I say we've got overall we got a weak sterling, weak euro on this data today, stronger yen again, and a stronger US dollar. So see if that trend either continues or is interrupted on the data. And just in the last hour, we've had retail sales out of Canada, which is a bit better than expected for September. Housing data cooled a wee bit for October, and headline retail sales in line with expectations, but the core number was much stronger than expected. Big bounce back from last month as well. So obviously this retail sales can vary from month to month, but that was a surprise uptick for Canada. Hasn't really helped the CAD against the US dollar. So let's have a quick look at, we'll come back to next week as we wrap up the week after the data's come out in 10 minutes or so, but let's just have a quick look at the commodity of the, or the asset of the week, which is obviously our, just tidy all that, get rid of my order panel. Which has been obviously Bitcoin and all the chatter about 100,000 being inevitable. I wrote that myself yesterday. It just seems completely inevitable, doesn't it? But not at this first push. Well, at least not today. 99,557 here on our trading platform here. We've cooled today here. The setup we got today, I've changed it. I've got lots of different profiles. I'm going to do some teaching webinars on some of these setups. Lots of people ask me, what sort of setup do you use? What's the best for this time frame? What's the best for that time frame? What's the best time to trade? I'll be doing lots of education videos along that, but we'll do some next week as well on some of these setups. But this is a very, very simple crossing EMA strategy. So exponential moving average. The pink line here is the 21 period, so it counts 21 candles before it plots the average. The green line is the 9 period exponential moving average, so it's 9 candles, gives it the average of the last 9 candles plus a little bit weighting towards the last few candles. That's really the only difference between the exponential and a simple moving average. And then the orange line, the closest to the price action, is the 5 period moving average, so it only counts 5 candles and plots it. So as you would expect, the 5 is closest to the price action, the 9 is the middle one, and the 21 is the one furthest away from the price action. So we got daddy bear, mummy bear, and baby bear as far as moving average is concerned. And what you want to see with moving averages is obviously them sloping, give them some sort of angle. As you can see here, a nice angle. We've had a nice trend up for Bitcoin. Again, it doesn't really matter what the asset is. Moving averages work on all assets. And you can see, as the moving average is angling, horizontal levels become key. There we go. 93,000 was a key flat level of resistance area here. We broke through it. 92,500 there. You can see that picking up there, the tops of these candles, key area, and we broke through it. So anyway, up we go. So again, technically, this triggered short here an hour ago. 2 o'clock, Bitcoin went short for Friday on this hourly time frame. Rounding top, classic sort of running out of steam. Didn't get to the 100,000. Everybody was saying it was inevitable, including me. But it's going to go. I think it's probably going to go much higher than that if Trump actually follows through with all his plans to make, start holding Bitcoin as in the US reserves. But anyway, that's perhaps a long time. Well, maybe not. Maybe a long time ahead. Maybe not a long time ahead. But anyway, we've got a big down candle, so that's triggered short there at 97,747, and down we go so far, and we're sort of in the money at the moment. Stop loss. Ideally, you want to be the turn of the market, which is basically the top of that candle or even the top of that wick there. But the other way of doing it with this strategy is, count 3 or 4 candles back. 1, 2, 3, 4. Where's the high of the last 4 or 5 candles? Well, I'd risk it for that. That's our stop loss. That's our entry. Roll it down. If this candle continues to move down, we might move the stop loss to the top of this candle, our entry candle. But a nice strong break of the 21 exponential moving average. As you can see, it hasn't done that for a long time. Hasn't done that here on this hourly chart. Broken under it since the 20th of November, 2 o'clock in the morning. And there's not a lot of volume around, let's be honest. But there we are. It's broken it. It's broken it significantly. So lots of profit being taken out. It's a Friday afternoon, all that sort of thing. Obviously, you traders in Asia are already on your weekend. The Middle East is on its weekend, and it's 2:30 here in London. So the weekend's looming as well here. And see, and the other thing with this platform here, based on the trading view charting, is it when these moving averages cross, it gives you a little blue sign, so it's confirmed. That's just why we've been talking, since doesn't do it straight away. But you can see there that's confirmation. You can see here the last one was a short there, which didn't play out. It was crossed, it'd gone under on that one, and it just went sideways and it stopped us out. Probably probably about there as that got out. So that was a losing trade, but this is very much a winning trade. And you see here when the market's going sideways, chopping around, this is the one of the problems with moving averages, when markets are sideways, it's not trending, so it's not working. So you get lots of false trades. People criticize moving averages being too laggy and too slow, but more on that when we do our little education webinar. But say Bitcoin short at the moment. So let's have a look at the others as well. Let's go to the forex market. I've been talking about the majors. So euro. Huge move down, and again, same setup, same hourly time frame. The last trigger short was back here on the 21st, yesterday morning at 7 o'clock, and it's been short ever since. There's no reason to close out that trade. Went sideways there. It did test the 21. It went back above it, but in that final hour this morning, after the data, it moved back down, and it was a big leg down. Took some out of that as it went through, or many would have taken that as it went through 105. That would have been a key area, but we've been as low as 103.32 this morning after the French and the German PMIs disappointed. Ms. Lagarde talked about, well, she didn't actually say it again, but it looks like they're going to go ahead with their next rate cut in December. So euro very much under pressure. And as far as today's concerned, we go back to the beginning of the day, which is here on the hourly time frame. Our high is 105. We talked about this all week. 105, 106 channel, as we can see. We're waiting for the break to break, and look at how it's broken. Again, classic sort of movement. The longer markets go sideways, the bigger the break either way can be. And this was from where were we? We were back at Thursday, Friday last week. We came under 106. You can see the big down candle there on the 13th, and then we were in channel bound 100 pip range. But when it broke significantly, a bit like the 107, 106 range. Didn't last as long because the trend was coming down. But again, a big break, a significant break, and that's why that the size of candles are always important. So there we go, breakdown here, and there we go. Let's just slip this down to the 5-minute chart for the actual data move. So we can see this is our big load here, 103, and we're sort of waiting for the data. So since then we got 104.05 and 104.33 is a sort of the 20 odd pip range waiting for the data. So let's have a look how the data is looking to drop in a minute. So here we got where are we? 45. It should be out now. This is an internet feed, so it's not the quickest, my friends. So it's not quite through yet. It says 45 on my laptop here. So look, there's any reaction to the market? Not really. Remember, we're looking on this 5-minute chart. So remember the trend is to the downside. So we'd be looking to, if we just put this, that's our range. We're looking to break on the data breaking, and we're looking. The emphasis probably should be to the downside, given that that's the higher time frame trend. But obviously, with 5 minutes can go either way. So that's sort of what's happening as the data is broken here. So euro's going down again. So let's have a look if that's come through on our chart. Am I going to have to refresh that? It's a bit of a shame because I'll lose it all. I'll probably lose my settings. Indeed, I have. So let's have a look today. Filters. We want the main two. One of the problems with interactive setups, they can be a bit twitchy. So there we go. Services has come in much stronger than expected. It's only 2 points above where we were last month, but that's quite significant when you were at 55 to 57. That's a big percentage beat. So services, which is 88% of the US economy, regards itself as a services-based industry. That's a nice, strong move. And even manufacturing has moved up as well. Still in contraction, but it was in line with expectations, the top end of expectations. And the composite, the combination of the two, was also ticked up quite significantly to 55.3 from 54.1. So it's a strong, another good tick in the box for the US economy. PMIs, remember the beauty of them are forward-looking. So we'll see what the University of Michigan looks like, what the consumers feeling like, what these sentiment numbers are like. Remember, these are expectations. These are how the market, how people feel about things. It's not actually real data in that sense, but these soft pieces of data can be quite as significant as the hard bits of data. So services PMI is 57.0 from 55 last time. The composite is coming at 55.3 from 54.1, and the manufacturing number is in line with expectations of 48.8, still in contraction, but continuing to improve. So that's a good set of data. You would expect perhaps the euro dollar to be under pressure. So let's wait for patience is key, guys. Even if you wait the 2 minutes after the data, that's to the downside. But see if we break the 104 levels. Maybe some buys at 104, as we've seen all week at 105 before the data came out. This is up here, wasn't it? It's, earlier on in the week at 105 before it unwound this morning on the week European data. So let's see where that candle finishes. Are we going to break this recent channel we've been in, or are we going to still move back? If we stay above 104, you could look to perhaps track back to 104.25. If we break this, remember that's in line with the downward trend. We might even be, testing the spike and the worry from Lagarde and the French and German PMIs this morning. It's unlikely to do that, to be honest. But this level, 103.32, mark that on your charts. That is a key recent low, big recent low, way below 104, way below the key 105 for Euro traders. So really, guys, watch that significantly as we go forward into the end of the year. So we seem to be holding 104, so this might be actually a buy rather than a sell on this 5-minute candle, but we've still got a minute before that closes. Let's have a look at how sterling's reacted. Sterling similarly moving to the downside. But interestingly, sterling here on the 5-minute time frame has been ticking up. So the PMIs in the UK weren't as bad, so we went into the very significant 125. So that's a big buying area for many institutions. Many central banks, many investment banks will be buying sterling at cable at 125. As we saw, we bounced, but we can't get over. There's our sort of European session high, 125.35. So let's do that like we did. Horizontal ray. That's the high that's in place now, and 125. So again, we're in a range, but again, you can see this has been biasing up to the upside. So it's, as you can see, it's crossing here to the downside. So this is perhaps a sell to the downside. But whether we go back down to the 125, we'll see that obviously there's still some more US data. So it's positive for the dollar. This data that's come out, we've seen euro moving lower, so we've got follow that through. So that's a tentative short position. See if we can get back down to the 104 on those two. So cable short, euro not as significant, but it's it's still a short position on there. Let's have a look at how gold's reacted to the call. Obviously gold's had a right old run. We're back to testing the 2,700 levels. It's been a great a run here. This is the let me just take this back up to the hourly, show you where we were. Big old run. 2,700 is off the top of the chart here. Is it? I've lost all my lines that were on my previous chart. Is this from yesterday? Yeah, 2007. That's not upside high, but anyway, as you can see, again, gold's been long here on this 1 hour chart since 1300 or 2 o'clock candle was the last major move here on the 20th of November, 2 days ago on Wednesday. So it's continued to track higher, stalled around the 2670 level. Remember, we were talking about the 2600 level at the beginning of the week, then 27, then 30, 40, and 60. They got all those targets were taken out, but we're still trending high. So there's no reason to have closed that second part of that trade, and a breach here of 2675, which has happened this morning, and we continue to rally high. We didn't quite get to, a bit like Bitcoin didn't quite get to 100,000. Gold hasn't quite got to 2,700 today, and it's rolled over. And in fact, it's looking to perhaps trigger a short trade, but again, still long. We're still in that, close some of this last leg up. But as far as the reaction to the news, if we look at the 5-minute chart for gold, and just reset that, so you click auto, we get it reset. That's been interesting. There you go. It's across to the upside on the initial data, so that was triggered a long position there here at 26.91. So this is a bit more in the money for gold. So gold triggered long as the data concluded. So at 50, 1450. So we can't trade the 2-minute calm around the news. So we actually got in here, 26.91.78, and we're at 26.95, nicely in the money on the gold trade on that on the data. Let's go back to the not the crosses, the majors. See how sterling's are done. So that's triggering a short again in line. So it's more or less flat. We're not out. We're not either in or out the money on that one. And euro was already short here, wasn't it? It went back, but another short place here, but it's not moving at the moment. So we're short, but we're flat at the moment for those two majors so far today. Let me just check my end of day. As we come into the end of the week, obviously the I have an end of day strategy on a different workstation. I'll just bring it up and see what's looking to trigger perhaps tonight. And it doesn't want to work. It's always the case when you're trying to do something live, isn't it? Oh, come along. Being very slow. Oh, anyway, let's have a look at some of the where that comes back up. So let's have a look at the Aussie. Remember, Aussie key level this week has been the 65. Again, I've lost all my lines from yesterday, which is a bit of a shame. Sorry, my other system is just coming back to life. There we are. So the Aussie key area .65. We've been pivoting through it all week. This is the 5-minute chart. Let's go back to the hourly chart so I can get a bit of context. Lots of volatility in Australia. The Australians still looking to hold pat with regard to their central bank. So 65. So we're here we are at 64.95. So literally 65, completely in play. We're pivoting around that key level, and we have done all week. Actually, it's a log scale. Let's go to the auto scale. There we are. It's a bit easier to understand, isn't it? So 65. Let me just put that back on again. Should start, check why it's not staying on. I think it's when it's refreshing. So 65, it's not exactly 65, 65 and 1, but you get the point. You see how we've sort of rotated up and down, up and above the key level. So down this morning as low as 64.70. And again, sort of biased to the downside on the data. So we'll see a similar sort of move for the Aussie in the 5-minute chart. There we go. Big down candle, short here. It's back out of the money, that one, but Aussie trimming down. Remember, Australia traders are already on their weekend. So right, my chart's just triggered here. I've got so what I'm looking for tonight, there's quite a few on the board here. I've got Swiss yen, euro pound, the SPX 500, S&P 500, and US 30. Obviously, none of this will confirm until the market's closed tonight. But let me just have a look what this is trying to suggest to me. My end of day price system is saying a long on currently on the US 30. So let's have a look after the bounce yesterday and today. So let's go back to the indices. So that's what I'm looking for tonight. So you want to make a note of these. My system will sort of track those. So US 30 long on a daily basis now. So we've got the daily time frame. So here again on the crossing moving average, it went long there, it came back, and that's probably that'll still be in play actually, but it's triggering again today. And now then, what a lot of people would do, they get freaked out because we're at all-time highs, 44,220 at the moment. People say, well, that's high, it can't go any higher. Markets can go much, much higher and much, much lower than many of us ever expect. So don't, I learned a long, long time ago, do what your system is telling you. trust the system if it's worked, if it's been back tested, if it's been robust in lots of different markets. And the little system I'm talking about to the left of me, which you can't actually see at the moment, it is across all markets. So it works on indexes, it works on gold and copper and silver, it works on forex, all of major forex pairs, and that's what it tracks, and that's what it triggers on an end of day basis. So the S&P, sorry, not the S&P, the US 30 is looking to go long. Next one is the S&P as well. Indeed, the S&P is also looking to go long. Also, obviously, very, very similar to this pattern as far as what the candles look like. So the SPX 500 on a daily basis also looking to go long tonight into close. And again, that's been long from the 6th of November, rolled back. But the stop loss might have been stopped out. That I haven't been tracking, but actually it hasn't closed under the 21 EM. Oh, it did. There we go. So it probably closed flat, but then it would have got actually, this continuation trade would have triggered long yesterday, in fact, and so the more conservative system is looking. So it's already gone long again. And again, I'll explain how this strategy works, this end of day strategy. So it's gone long again as a continuation trade yesterday, and it's looking to go long as a new trade tonight. Okay, so US 30, S&P 500, both looking to go long tonight. They're the only two indices that are looking to trigger. So I've got the other two assets over on my personal system is the some crosses. So I've got euro pound. The beauty of somebody's just asked me about why the end of day. Well, the beauty of end of day is it's a real sort of set and forget system. Okay, it triggers at the end of the day. You don't have to. You're not constantly on your screen. You're not constantly looking at what's going on, what might be going on, what might not be going on. But this is looking to go short euro pound. I don't know actually, given the volatility today. However, the system's a system. As you can see, it's also crossing on this setup as well on an end of day basis. So that's triggered short, looking to go short as well. It's triggered because of lots of the volatility, but if you can see, we're already at relative low. So I'll have a real good head scratch at that tonight, whether I actually take that or not. So, but euro pound at the moment is still looking to go short tonight. The recent low it didn't actually get to today on the grief of the data that's come out. 82.60 could be the next is a long low, but we've been there's quite a strong level there which we've been to and ran through today at 83 itself, but that is still looking to go short. Let me just go back to the I'll come back. There's another one still looking to trigger at the moment, and that's the Swiss yen, but we'll have a look at that in a minute. Let's look at what the University of Michigan data has shown us, or what's it's telling us. Again, does it not update this thing? Oh, come along, investing.com. I thought it was a bit more on the ball. I'm going to have to refresh again, aren't I? So just bear with me a sec. Let's just scroll through it all. And we'll have a look at next week in a minute. Where are we? 20 seconds. There's loads of data in. So, interestingly, the consumer has weakened when this survey was taken. So, consumer expectations have weakened to 76.9, sentiment at 71.8 from 73. So it flies in the face of what we've seen with the forward-looking PMIs. Remember, this is real data. This is sentiment, how people feel. But current conditions also back under 64. 64.4 was expected. We're coming at 69.3. So that's relatively weakened the good news out of the hot data. So those positive dollar numbers from the hard data from the PMIs maybe cooling a bit. So let's just go back to see how that's impacted our two short positions. We were just looking at 5 minutes, weren't we? Let's reset that. Yeah, so we're still in the money, but perhaps not so. So 104 was our target. It's come back. So we might take some pips out of that one on the euro. So it's actually continuing to pull that down. That's interesting reaction to the downside. Obviously, we're already in from just a bit here, 104.06. So we've got 6-7 pips at the moment. So there we are. That might, obviously, we might find some buyers here at that 104 level. So I'll have closed a bit of that, but there we go. It's continuing to follow through. Thank you very much. If that continues to move down, next level would be here, 103.85, or even the end of the candles there, 103. 89. Don't want to get too greedy, but yeah, that's still in the money and running. There's no reason to panic and get out of that, even though it's a 5-minute candle. Sterling, similar sort of setup, I would guess. Yeah, it's just not moving as much as the euro. Euro seems to be a bit weaker than sterling, given the data this morning. That sort of makes sense. So this euro pound short sort of makes sense. On an end of day basis, it's in line with the weekly trade. So this is a daily, remember, daily trend. It's in line with the weekly and the monthly direction, which is still down for euro pound. So we'll see that. So those two shorts we did on the news, both nicely in the money. I don't think we're going to get all the way to 125 for cable, but certainly euro's got to 104. Taking some pips out off that, and but that's still running also to the downside. So just back to tonight. My other FX cross, which is looking to trigger currently, as I say, bear in mind it doesn't close. We're only 1,500 hours. There's still another 9 hours to go before 2,400 hours comes up on the clock. But Swiss yen is also on my watch list for tonight. Also a short, which is interesting because the last 2 times this is triggered, we had a long back at the end of November, which played out, end of October, which played out, and we had a short a long a couple of days ago, also for Swiss yen, which didn't play out. We stopped out on that one, virtually in the same day, within a few hours of opening it. So we've had 2 strong days for yen. Let me just bring that up. I'm talking to the screen. I'm to you guys, and you know what I'm talking about. I'm talking about Swiss yen. So let me find Swiss yen on here. Where's Swiss yen? Swissy. Search. No, stick it in the search. Plan Swiss JPY. There we are. Thank you very much. Swiss yen. Let me show you the daily time frame, show you what went on where we got stopped out. So this was a long position here on my strategy. It's very similar to these moving averages, not exactly the same, but it went long here on when was that? Wednesday night. But yeah, I would like to see it more of that. Anyway, the system's triggered here long and it stopped us out, so it's short. It didn't trigger short yesterday, but it's looking to go short today, which is interesting, isn't it? We need to. There's a key support level there, 172.55, which you've tested so far today, but that's looking quite hefty. So that looks more interesting to me than the euro pound short. But we'll check it all again tonight before close. So that's pound. That's Swiss yen looking to go short tonight. Euro pound also looking to go short tonight, and the S&P 500 and the US 30 both looking to go long tonight on an end of day basis. All of them sort of in line with the higher trend. The monthly Swiss yen is down. The weekly is triggered up at the moment. Obviously, the S&P and the US, their monthly and weekly trends are all very much to the upside, so it's with the trend this day, end of day trade for the 2 key stock markets. And euro pound, that's also in line with the trend. So the weekly trend is down and the monthly trend is down. If we just go back to I'm just saying, if we just go back to euro, use that as an example. So we're with the trend, so that's euro, where we are, euro pound. So it's looking to trigger short tonight. Again, don't jump in early, guys. Somebody's just said to me, should we open it now? No, because the rules are it's an end of day trade. And anything could happen. We don't know what's going to happen before the end. We've had loads of volatility already today, so patience is key. It may or may not work. You may win, you may lose. That's the 2 outcomes. That's the only 2 outcomes you ever get with trading, guys. So, yeah, be patient. So what I'm saying is, look at the weekly trend. The weekly trade is still down. Look, it hasn't been, it's been under the 20-week moving average here since August, euro pound. So it's been going down, technically on this setup since August. The system you can't see is not this system, but it's it's a trend following system. So the weekly's been down, and we got to the higher time frame, the mighty monthly time frame, that is still down. You can see here on this chart, this triggered short on a monthly trend back in June 2023, and it hasn't turned around since. You can see here on the monthly, if you zoom that up, you can see this is a monthly, remember, so each candle here represents a trading month, and it's been short all this time. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, June 2023, all that time, all of 2024 and half of 2023. So why fight it? And look at this, look at the candle for this month, November. We're nearly up 22nd. It's a big down one. And it closes, that's a very engulfed new lows here. Where do we get lows? That one we talked about before, 82.28, which takes us all the way back to March 2022. So, way low. So the trend remains the same. So, the daily is looking to do the same. So obviously that changes from month to month. But so the daily is looking to go short there on euro pound. So my friends, the main data of the day is out and bagged for the day. Indices. Let's have a look at the indices. We had a look at Nasdaq was the only one we didn't look at. So Nasdaq here, sort of cooling, triggered long. I think we said this system actually went short, and then that's wiped it out because it's triggered back the other way. So it's flattening out at highs, but it's all-time high 21,262. Don't rule that out. That still looks pretty positive to me, even though that short from last week hasn't played out. We've just sort of gone sideways, but it's it's running out of steam potentially. So this is short Thursday, short Friday. It's still short. This strategy is sort of suggesting that that's moved. The shorter time frames, the 5 and the 9, have triggered, gone back up. It's funny to put it there, but it's really, you can see that's very much a consolidation, which is why my other system hasn't triggered on the Nasdaq or the Nasdaq 100. Have a look at that. We've been open half an hour for the final trading day of the month of the week, and we're relatively where are we? As far as today's concerned, today's lows was down there at 26,630. Top was 2,800. So there's a 200 point range for the Nasdaq 100 today. And we started as the cash market opened, we ran positively for 20 minutes, and then it's reversed that, and it's taken out all the gains of the opening half hour, and we're down now. So we may be chopping around a wee bit, or we are chopping around a wee bit from long to short. But again, here on the 5-minute chart, the last trigger was a short one. That long one played out a bit, but you'd have probably if you'd opened that, you'd have stop loss round about there, or broken. So I'd have got out there, got in here, get out there for a loss as it's gone back under the high of the day before before the market. In fact, the high of the day was here before market. So it was looking quite positive first 10-15 minutes, but it's reversed it immediately. So going out. So that's looking quite negative, to be honest, now in this current data, as the dollar's got better and improved, and the Michigan has weakened. It's hit stocks in the last 15 minutes as we've moved down. So there we go, my friends. Any particular assets anybody wants to have a look at? There's nobody talking to me today. I must be boring everybody stupid. There we go. Such is life. Let me just finish with our see how our shorts are playing out. So it's bounced back. So that's might close itself out there. We were there. No, it's still short. That's still okay. And sterling, again, that's also reversed to the upside on the Michigan Missouri data. Dollar's weakened a wee bit on that. So we're still very much sideways, aren't we? This is the range, the 5-minute range on the data. The data really hasn't moved things on there. If we go up to the higher time frames, the trend still remains very much to the downside here on the hourly time frame. But as you can see here, the buys at 125 are still in place. And today we've got quite a strong support at 125.10. So we haven't been under that for 1, 2, 3, 4, 5, 6, 7 hours now. 125.10 is your support going in for the rest of the day. But here on the hourly time frame, we're still short. We have been from say yesterday. And there's no reason to be closing that out yet. The moving averages are still aligned in the right direction. They haven't crossed, they haven't got close to crossing, so just be patient. Obviously got a bit excited this morning. People will be closing out those positions as the day draws to an end here in London. Obviously volumes will drop off in the next hour or so on the Forex market, so some profits being bagged there. Similarly with the euro, it's been a good day for short positions. Breached the key 105. That's the big news from yesterday, and then today we've gone under 104, and we've gone even as low. I say, mark that on your chart: 103.33, 103.3250. You know, a level to watch as you run into the end of the year. And will Miss Lagarde and gang move lower again? So 104 is holding, a bit like the sterling. It's held for the last 7 hours. That's our key support today, with 104.35 the top. So tight 35 pip range now for euro, but again remain biased to the downside. The hourly chart remains in line, but profits again probably getting taken off the table for the day and for the week. For some others, you know, longer term traders, it's just the trend continues to unwind. So with that, I will wrap up. Let's have a quick look. We'll have more details obviously next week. Let's have a quick look at next week. We'll just look at the high impact events for next week. What will show me next week? There we are. I want to show you this week. Apply. I just want to show you the high impact events for next week. Obviously, as I say, it's Thanksgiving on Thursday. Actually, let's just look at the high impact events. Apply. Relatively quiet again next week. So consumer confidence, the consumer board, consumer confidence, more important than the monthly stuff that comes out of the University of Michigan. We've had existing and pending home sales this week. Next week we've got new home sales also on Tuesday. Later on Tuesday, it's the backward looking. There's still can be quite significant about what's actually said. That's why they're important. The minutes, it's what's documented. It's what's going to be there for the the rest of eternity, if you like. But Wednesday's the key day, given that Thursday's closed. We got core PCE. Remember, it's the Fed's preferred measure of price inflation in the United States, 2.7%. Month on month, 0.3 of 1% for October. See what that looks like on Thursday, along with the initial claims earlier on in the day, and the durable goods at 1:30 GMT, and the core PCE at 3 o'clock to round out the week, basically. Let's be honest, because Thanksgiving, things are quiet. We've got German inflation on Thursday, and although it says all United States Thanksgiving early, yeah, does it? Not close. It's early close. So it's half a day, and some Chicago PMIs and euro inflation on Friday as well. But it's really a compressed week next week. See if that trend for the dollar continues. It continues to recover. See if stocks continue to push high. We'll see how we close tonight. Remember, we're looking to go long US 30 and the S&P 500, and see if this continues to move along. The weakness of the euro, the strength of the dollar this week. So there's no more requests for anything, no particular assets. I will bid you a fair afternoon, everyone. Stay safe. The sun's still shining here in London. It's due to absolutely rain very hard tomorrow, so I might be ending up staying in doing some jobs inside. So take care, everyone. May the pips be with you, and we'll see you all on